Hello, very warm welcome. You're watching another fresh episode of Your Trades. This is Priyanka Kapil, along with me is Ankita. Ankita, yet another day of banks. Yesterday we had a note on Bernstein, and of course they were undervalued sector wherein the most of the catch-up could be found in private bank rally. And again, Macquarie also came up with another note, and that's what further fueled the rally. However, there was a little muted session. Nifty could not hold on to 23,600 levels. In fact, that happened to be the resistance wall also. We closed below 23,600. Bank, they rallied for about another 400 points today, closed with 400 points gain today. The note Macquarie, wherein they talk about majorly the private banks again, HDFC Bank, ICICI Bank, they both contributed nearly 200 points to the rally today. Macquarie mentioned three couple of things, important note in the notes, that they've upgraded Kotak Mahindra Bank, outperformed from neutral. Therein they have high the target price. City Union Bank and a couple of mid-cap banks also, City Union Bank, Bandhan Bank. So banks were again on a move today. Another gaining packs, another set of stocks which were the pack of metals, majorly stocks like NMDC, and in fact this was the entire pack gained down about 2% in the whole trade. Real estate pack, metal, banks. Standout gainers were again fertilizer and chemical stocks like Chambal Fertilizer, RCF, FACT, NFL gaining more than 15%, 20% of trade also. In fact, a couple of broking counters also were up in action today. JM Financial counters like 6%. Religare was 4%. But then we did find stellar move. The sector which stood tall again was auto ancillary. Stocks like majorly from the broader market, Shivam Autotech, Jai Bharat Maruti or Bangkok Bharat Forge, up more than 5%, 7%, 9% move coming in Shivam Auto pack also. And a couple of stocks from the consumer pack as well as the capital goods space. So a lot of buzzing counters, and of course on the brokerage notes also, Ankita, wherein we saw Goldman Sachs giving an upgrade on CE Infosystems, target price of 2,800. They're talking about the mapping the India's digital mobility story. And there was another counter, Uno Minda, again from the auto ancillary pack, wherein Goldman Sachs gave a target price of 1350. And they're talking about higher multiplier on the entire industry volume growth. Plus, they're talking about the stable margin for the stock. So another day, yes, but then there was some resistance at the higher levels, and we could not hold on, at least for the Nifty.
Absolutely, Priyanka, which brings me, let's get Kunal on board on the technicals, and that brings me to my question, Priyanka, that Nifty could not hold up to those gains. It closed within the previous session, and so did the mid cap and the small caps. Kunal, tell us, is fatigue setting in the market? Is it poised to now from here? Is it resting? Will it go on the up move, or is the trend reversal going to happen and we are going to move downwards from here on?
Let's hope not. Fingers crossed. Trend reversal doesn't happen, and reversal is a word which is very. Post elections we've seen the reversal word shaping up for the indices, but I hope that that's not the case. So the best part about this market rally which you've seen the last 10 days to 3 weeks is the kind of sector rotation at play. So initially it started off with the auto stocks doing pretty well, then the baton shifted off towards recovery from the private sector banking names. IT stocks saw a round of short covering, and now we are getting into the mid cap end of the market where you've seen fertilizer stocks, chemical stocks, sugar stocks, metal names. Those stocks have started to get back into a participative mode. And then the last 3-4 days you've seen the auto stocks, the larger cap names correcting by a margin of 4 to 5%. So I think in that sense it's a very classical and a perfect kind of a sector rotation, and that generally doesn't indicate any major reversal patterns for the indices. Now the only I would say sad part about the market today is that after 6 consecutive days of the Nifty making fresh highs for itself, today was a day where we did not make a fresh lifetime high on the indices, even though we closed on the positive note. So maybe we can expect that we could probably get into a pause for the indices over here, but 23,500 mark net should, I think, be a very strong support which we should be holding on to on closing basis.
All right, just to mark one more key important thing, that Indian rupee, that fell to record low versus dollar. That's what we're tracking, the rupee movement also. But then, yet Kunal, the way you said that we are in a upward trajectory only, it might be a little consolidation which maybe can capture some more days. What are the safe trades? Which are the sectors you would bet on? Is banking going to be on fire mode again? Metal will drive the rally further. What are the counters that are on your radar?
So yeah, I think it's a very good time to try and play the momentum theme over here rather than going for a contra buy or sell in these kind of market scenarios. So I'll probably pick two stocks in the individual categories, mid-cap names. The first one is one Usha Martin. So after a stellar round of breakout, the stock had shown very good volume pickup in the last 1 or 2 weeks, and that generally has changed the texture for the stock completely. So from being an underperforming stock, the stock has now confirmed a breakout for itself. So would suggest to buy with a stronger target of 440 over the near to medium term. Stop loss could be kept at 380. And the second would be about IDFC First Bank. Again, a classical breakout stock for itself, confirming a breakout above 50 moving average and very close towards a breakout above the 200 DMA for IDFC First Bank. So this could be a stronger breakout candidate over the near term. Targets of 88. Stop loss could now be revised to 80.
All right, Kunal, thank you so much, and thank you so much for joining us with your picks. But with that, even Srishti is standing by on the charts for us. Srishti, tell us what have you picked out for us today?
So I've picked out two counters, firstly on the breakout side and the other one is on the breakdown side. So the markets, though, seem to be a little range bound, but apart from that, a lot of stock specific action. So first up, let's have a look at one of the counters that was seen to be under pressure today, and that is Lupin, because this counter is what we have spotted as a breakdown candidate, because if you will see, then the stock was though in a momentum, but is seen to be retesting its crucial support of 1550 rupees, and whenever a stock retests its support level multiple times, then that support actually gets weaker with every retest, and that is what we have spotted on Lupin for today. And the stock is also trading below its all key moving averages. On the charts, you will see that a retest of 1550 support is being retested by Lupin, and that's why we have highlighted this on the breakdown side. Moving on to the next one, a breakout stock for today, very volatile one, you all must agree, and that is Indiabulls Housing Finance, because this stock, though it has shown great momentum after the election day verdict day, but apart from that, what was interesting to see that this particular resistance of 175 odd rupees is finally taken, though the stock did come to those levels, seem to be consolidating for the past 4 to 5 days and then resuming its journey upwards is something that is giving confidence, and this is the other stock that we have spotted on the breakout side. So these are the two stocks on the technical front. Back to you.
All right. Thanks very much, Srishti, for both the stocks and the movement that you tracked on the charts. Thanks very much. But then let's get you the word from the wise. We had Dinsha Irani talking on PSU valuation today. He's of the view that PSU valuations looks extremely stretched. Dinsha Irani we spoke to, and that's the reason he feels is enough to avoid the entire space, or maybe there are select pockets of opportunity which needs to be explored. Let's hear in what exactly he said.
Some of the stocks that we've been moving out of are mainly those names, like for instance, some of the stocks in defense. We've not been too comfortable with the valuations now. They look very stretched to us. So we've been chopping some names there as such. Railways we've always been away from. I don't think the valuations that are there today are justifying any investments. I mean, even looking at the future growth such. But there are certain pockets which are still fairly, I would say, reasonably priced, not as compared to history, but reasonably priced as compared to the peer group. For instance, the oil and gas sector, which looks fairly reasonable. Even in the power space, the utilities and obviously the transmission companies that I'm talking about, they are looking pretty decent, given that if India was to become the sourcing base for the world, power is one thing which is going to be an intrinsic part of that.
All right, moving on, keeping financials in the spotlight as they were today, we have a number of big market voices. Manish Chokhani, Ridhan Desai, Atul Suri are sharing their take on this sector. So let's go across and listen in.
Financials, this center point of the country will pass through financials. And it's not just the banks, the wealth management companies, the mutual funds, the stock markets, enough range of things to play there.
Financial services led by the lending, large lending businesses, and I'll emphasize large because the environment is very favorable for large, not necessarily the small. And capital market businesses, financial services overall, I think is set for a major leg up. It has been lagging the market so far. I think that's where the valuations are looking quite good. And there is a very strong earning cycle coming.
I may sound contrarian, but I am not very bullish on banks and private sector banks.
You're the first one to say that.
I'm not even bullish on IT. In fact, they are the two most darling.
IT is almost a consensus trade.
No part of lending at all? See, I prefer the NBFCs.
Yeah,
I
that's what I
feel
was
there are
asking.
pockets in the NBFC space which I'm bullish on, and that's what's there in our portfolio. We are actually a fund that is massively underweight private sector banks.
That's why, Ankita, our viewers would always be ahead of the curve. All the experts talking about the financial
Absolutely.
space, and what we saw last 2 days, including today, is financial space driving the entire rally.
Right.
We slip in for a short break. Once we come back, we have more for you. We have derivative side, a lot of action, big stories, and the stocks that were buzzing in trade today. Don't go anywhere. Welcome back. You're watching Your Trades, and now the action from derivative space, which completely looks towards the long built-up side only. In fact, FI's long and short ratio is constantly improving. Now, FIs are at 54% long versus earlier, which was lesser than 30% also. But then outlook has also improved on index futures. VIX continuously is on the decline side. It's about 13.3 now. That means puts an rest to a high volatility session on the either side. For June 27th expiry, Nifty has a long built-up trend. Bank Nifty also has a long built-up trend. The active calls, where the maximum of the call buying happened, they were at the strike of 23,600, 23,700. But then at the same time, the support has also risen. Now we have risen from 23,003 to 400 to now 23,500, because that's the maximum of the put writing action which took place. So we are in a range, Ankita, right now, but then we are moving upwards clearly because support is rising. And of course, 23,600 we briefly touched also today.
Absolutely, waiting and watching out for that. When can we hit those levels yet again? But moving on to the big brokerage call of the day, Goldman Sachs initiated a buy on CE Infosystems and Uno Minda. Let's go across to my colleague Gaurav, who's standing by with the details of the note.
Well, yes, two companies were definitely in focus because Goldman Sachs initiated coverage on these companies. First, let's talk about CE Infosystem, because Goldman Sachs initiated with buy rating and a target price of 2,800 rupees per share. What they believe is that this company is actually mapping India's digital mobility journey. Emerging mobility segment is actually a better segment when it comes to opportunities if we compare it with core auto. According to Goldman Sachs, company already has corporate and government market that can actually represent and provide more and more opportunities for CE Infosystem. And lastly, they also believe that the core business actually is exposed to premiumization and electrification, which can help the company further in profitability. Given that the note has come, the stock has already reacted positively. We saw the stock hit upper circuit of 20% in a day itself. Next, let's talk about Uno Minda, because here also Goldman Sachs initiated with buy rating and a target price of 1,350 rupees. What they believe is that this company is actually switching lights on alloy wheels and EV segment. Company's localization when it comes to alloy wheels will actually help the company's profitability from here on. And apart from that, there is more room for growth when we talk about four-wheeler lighting and two-wheeler alloy segment. Lastly, they also believe that company will have higher multipliers because of the industry volume growth and at the same time stable margin profile. On back of this news, we saw this stock was also trading in green today. So definitely watching out on all these stocks because of the strong word coming up from Goldman Sachs on these companies.
All right, that's a strong verdict coming in from Goldman Sachs on Uno Minda. But then are analysts really turning bullish on CE Infosystems? Let's understand. Earlier, we caught up with the management also. We spoke to CEO and executive Mappa India, Mr. Rohan Verma. Let's understand what his outlook looks like on the revenue front and going forward on the margin front.
By FY27, FY28, we're looking to cross our milestone of about 1,000 crores in revenue. And if you see the past 3-4 years track record, we've been growing at a CAGR of about 38%. There's a lot of growth opportunities ahead for Mappa India if you look at the areas that we play in, which is maps, IoT, and drones. If you look at the track record, and we've always maintained that, at least in the past, that we're looking at a 40% plus EBITDA margin at the annual level and 30% plus PAT margin. The focus really is between growth and margins.
And moving on to yet another stock that was in focus today, and that is Religare. Now, what happened was that the SEBI has pulled up Religare Enterprises chairperson Rashmi Saluja and its board of directors for failing to comply with the securities law after the Burman family launched an open offer to acquire additional shares in the financial services conglomerate. It has directed the Religare board to seek RBI's approval within a week's period. My colleague Ankur Mishra is joining us with more details on that brewing story.
Yes, finally, we have seen a regulatory action coming in the case of Burman's versus Religare Enterprises. Now, SEBI has directed Religare Enterprises board members to seek approvals from the 3 regulators on the open offer of Burman's, and that needs to be done by July 12. Now, also here in the interim order, regulator has expressed unhappiness over the conduct of the board members regarding taking approval from the respective regulators. They have also sought written assurances from REL board within a week to comply with security law. Now, what is the matter? Remember, last year, Burman's had acquired over 5% stake in Religare Enterprises, and after that, the ceiling of 26% was broken, and as per SEBI law, they need to go for open offer. Now, for complying these regulations, REL needed to take regulatory approvals, but it did not do so, stating that it did not find Burman's to be fit and proper for acquiring the stake. And hence a letter was also written to SEBI regarding the same last month, but now regulator has clearly specified that Burman's should have sought regulatory approvals, and if at all regulator finds it is not fit and proper, that is a secondary issue, and that needs to be decided by regulator itself. Now, what is the way forward? The Burman's had already alleged that Religare board chairperson Rashmi Saluja was blocking the open offer, and now regulator has clearly said that it needs to comply with the interim order and seek approval from 3 respective regulators, that is IRDAI, RBI as well as SEBI. All these respondents and the notices which has been sent to the Religare board members, that can be replied within 2 weeks. In fact, a physical hearing option has also been given by SEBI to all these notices.
All right, the matter between Religare and Burman's looks unending. Anyhow, let's go further. Let's talk about the ethanol blending, and we did have Praj Industries Management today to talk about it. Shishir Joshipura, MD and CEO for Praj Industry, he spoke about ethanol blending. Let's listen into it, what he had to say.
In terms of blending, obviously, we have seen the impact it has when we blend it in petrol, and very, very ambitious program, very successful program launched by India. The government is being lauded worldwide for what they have achieved in this under this program. And the diesel, as you know, is roughly 3 times more consumption in our economy compared to petrol. So any blending that could happen there would dramatically impact some of the goals in terms of energy independence and forex exchange outflow, etc. So very clearly a solution has to be found for diesel blending. Experiments are currently underway. It may not exactly be ethanol as a molecule, but a slight variation of that would probably succeed. We are right now under a program that we are working along with several institutes to see as to what is that shape and size of that molecule that will actually address some of the issues that the diesel combustion requires. We already know what it is. We just need to go through some confirmation tests, and when we are ready, we'll talk about it. But that's definitely going to happen.
All right, moving on to another management that we had on our channel, Ashok Atluri, who's the CMD of Zen Technologies. He said that the demand for drones and anti-drone systems is very strong for both the Indian government and the foreign governments. Let's go across and take a look at what he had to say about the guidance for the full financial year.
The demand for the drones is actually increasing a lot, and but remember, we are part of the drone ecosystem, and we provide anti-drone systems to the government and foreign governments. So we think that the threat of drones is becoming very real. The drone has become the mainstay for the weapons in the armed forces, and all the armed forces need to protect against drone attacks, and that's where Zen comes in, and we provide the drone system. I think it's a a lot of demand is there, and we are trying to aggressively scale up to meet the demand, both from Indian government and the foreign governments. We already have an order book position for the anti-drone system that's about 600 crores. And there is an order book position for simulators, which is around 800 crores. So again, what I'm saying is the enhancements will be launched as we keep going ahead. We maybe a little sooner, but the enhancement will keep happening. So that the enhancement launches will happen as we go ahead. But yeah, the order book position is about 600 and 800, and we are expecting, last year we did about 430 crores. This year we are expecting the turnover to be around 900 crores, approximately 100% growth this year.
All right, now let's get you more stocks which were buzzing in trade today. Gaurav has compiled an entire list for us. Gaurav, take it away.
Well, yes. Let's begin with NMDC because we saw this stock traded in green today. It was up almost by 4%, and the reason being that now INCRED actually believes that the 67% iron ore premium that Indian companies provide can actually sustain at $40 to $45 per ton. And the reason being that there are many positive tailwinds for this sector, like pollution concern in China and Chinese steel export, which can actually support this premium. And on back of this news, we saw NMDC ended in green today. Next, let's talk about RCF because there was a bulk deal, 1.4 crore shares traded in the bulk deal at a average price of 221 rupees per share, which actually represents around 2.5% of the equity. And on back of this news, we saw the stock was up almost 20%. It hit the upper circuit. Next, let's talk about Vedanta because board actually considered and approved the fundraise via NCDs of 1,000 crore rupees. And after this, we saw this stock also traded in green today. Next, let's talk about PNB Housing Finance because a bulk deal happened in this stock as well. Around 13.6 million shares traded hands, which is actually 5.2% of the equity of the company at a price of 803 rupees. And if you look at the stock performance, the stock actually tanked more than 5% in a day today. Lastly, let's focus on Tata Communication as well because 3 lenders will finance the 5 years plan of around $250 million for Tata Communication, and this is actually because of the long-term ambition of the company to be net zero by 2035. And on back of this news, we will be watching out on Tata Communication as well in the days coming ahead.
That's all in this edition of News Bulletin. But Ankita, a lot to watch because we have a FTSE rejig tomorrow and around about $680 million expected. However, the stocks have already been on the move. ICICI Bank, Airtel, they would be on the focus, and a lot more from the global cues. Also, Bank of England is to meet on the rates decision today. So, a lot to track on the global front also.
All right, and with that, it's time to wind down on this edition of Your Trades. We'll take a leave. Thank you so much for tuning in.
If you like this video, then like, share and subscribe to ET Now.